Welcome back to XRP Insider, the channel that cuts through the noise and brings you the global financial developments that actually matter to your portfolio and your future. What we are covering today is not a rumor, not speculation, and not the kind of story you are going to hear mainstream financial media break down properly. What we are talking about today is a seismic shift at the highest levels of global finance, the kind of shift that most people are going to look back on years from now and say, I wish I had paid attention when it was happening. So if you are new here, welcome. And if you have been with us for a while, buckle up, because today's coverage is one of the most important things we have put together on this channel. Before we get into it, drop a yes or no in the comments right now. Did you know that Ripple and Swift are both documented members of the same BIS committee at the same time? Let us see how many of you already had that on your radar. Now, before we go any further, this is not financial advice. Everything on this channel is for educational and informational purposes only. Always do your own research before making any financial decisions. And if this kind of in-depth global coverage is valuable to you, hit the like button right now. It genuinely helps this reach more people who need to be seeing this information. Okay, let us walk through exactly what happened, why it matters, and what it means for the thesis that so many of you have been holding through the hard stretches. To understand the real weight of what is happening right now at the highest levels of global finance, you first need to understand what SWIFT actually is. Not just the word, but the architecture underneath it. Because the word gets thrown around constantly, and most people have only a rough impression of it without really grasping how the whole system is built. SWIFT is not a bank. Let that sink in for a second, because it surprises a lot of people. SWIFT does not hold your money. It does not physically move funds from one country to another. SWIFT is a messaging layer. It is the global communication network that tells financial institutions how much money is being transferred, where it is going, who authorized the movement, and what structured data needs to travel alongside that instruction. The Society for Worldwide Interbank Financial Telecommunication, that is what SWIFT stands for, connects more than 11,500 member institutions around the world. Every major commercial bank, every correspondent banking relationship, every financial institution with meaningful cross-border activity is either directly connected to SWIFT or linked through something that touches it. That network is the existing wiring of international finance. It was built over decades, embedded deeply into the global system, and trusted at massive scale. That is the foundation we are working with. Here is where Ripple enters the picture, and this is where the argument gets really interesting. Ripple's position, stated publicly by its executives over many years, has always been that the messaging layer is not the actual problem that needs solving. Sending an instruction from one bank to another? That is not what is breaking cross-border payments. The hard problem, the real structural issue, is the payment infrastructure that sits underneath the messaging. The actual rails where settlement happens. The liquidity that allows same-day cross-currency transactions to clear without requiring banks to pre-fund accounts in dozens of currencies at financial institutions scattered all over the globe. That pre-funding model is expensive, it is slow, and it is tied to a correspondent banking system that has operated mostly unchanged for generations. Ripple built the alternative. The XRP Ledger handles settlement, Ripple Payments handles the routing. And the position Ripple has stated clearly is this. If SWIFT wants to keep evolving as a messaging network, SWIFT can tap into what Ripple already built for the harder layer underneath. So what changed? What actually moved recently that makes today's coverage different from every other time someone said the financial system is evolving? Here is the moment that matters. At the Digital Banking Conference in Barcelona, SWIFT's own Chief Product Officer, Thomas DeLay, delivered a statement that represents a genuine, documented shift in institutional position. He said that cross-border payments already arrive in minutes. Speed alone is no longer sufficient. And then he addressed the debate the financial industry has been having for years: old versus new, correspondent banking versus blockchain, digital assets versus fiat currencies. And his answer was not to land on the old. His direction was clear: a multi-rail, interoperable ecosystem built for a more complex and connected world. What matters, he said, is not the rail a payment runs on, but that it works fast, predictably, and seamlessly. Read that again and let it land. SWIFT's chief product officer just publicly committed to a multi-rail system. That is not an incremental update. That is not a minor language shift in a press release. A multi-rail system means that a payment can route across different networks depending on what is fastest, cheapest, or most appropriate for that specific transaction. One payment settles through a traditional correspondent banking rail, another through a blockchain-based system, another through a digital currency network. The orchestration layer manages the full picture end-to-end, and the specific networks that Thomas DeLay named as part of this new architecture include real-time payment rails, gross settlement rails, card rails, e-wallet networks, and, stated directly, digital currency networks. That is an explicit architectural commitment from Swift's chief product officer. Digital currency networks are being built into what Swift is moving toward, and the orchestration of all these rails runs on ISO 20022, the structured financial messaging standard that Swift's entire new platform is being built around. Here is where the structural alignment becomes impossible to ignore. The XRP Ledger is ISO 20022 compatible. That match is not a coincidence. It is not a lucky break. It is a structural alignment between what Ripple built and what Swift just publicly said the future of global payments requires. And more than 50 banks worldwide have already signed on to Swift's new payment scheme, which introduces this exact framework specifically for consumer and retail cross-border payments by integrating blockchain and distributed ledger technology. These are major institutions, many of them already partners and customers of Ripple. The system is not being assembled from scratch. It is being built from components that already exist, already work, and already interoperate. One financial observer used a very specific word to describe Swift's current position: coping. Swift is coping with this disruption while simultaneously trying to occupy a leadership position in the future it once resisted. That dual effect, acknowledging the reality of blockchain while trying to frame it as strategic leadership rather than forced adaptation, defines exactly where Swift sits right now. Now let us talk about the BIS CPMI group, because this piece of the story deserves far more attention than it has been getting. The CPMI group operates under the Bank for International Settlements, the BIS, and its documented mandate is focused specifically on improving and enhancing cross-border payments globally. This is not an industry roundtable. It is not a conference panel. The PIE Task Force, the specific cross-border payment improvement group within the CPMI, has terms of reference confirmed as effective from 2025 onward. Right now, today. Both Ripple and Swift are documented members of the CPMI group. Ripple is not watching this process from the outside. Ripple is not lobbying to be included at some future point. Ripple is in the room, contributing to the framework that will govern global cross-border payments for the years ahead, alongside Swift, under the BIS, confirmed on paper. Consider what that means for someone who has spent years in this space. Think about the person who found this technology 3 or 4 years ago, held through every single period when the people around them called it speculative, who heard over and over again that real financial institutions would never engage with this, that Ripple was too unproven for serious infrastructure, that the global payment system had no interest in rebuilding itself around blockchain. The BIS Working Group, the body whose literal mandate is improving and enhancing cross-border payments, has Ripple in the room, drafting the standards, sitting alongside Swift. That is confirmed on paper. That is not a price movement. That is a structural confirmation that the thesis you held through the doubt was architecturally sound. And that matters in a way that no single price candle ever could. The pressure building around Swift is not coming from just one direction. It is coming from multiple simultaneous directions, and they all point toward the same conclusion. Iran built a crypto-powered shipping insurance tool specifically designed to bypass Swift and Western sanctions. Russia and China are both moving forward with payment infrastructure and digital currency frameworks that operate entirely outside of Swift's network and outside the US dollar system. Western Union, a company with more than a century of history in money transfers, is now evaluating a stablecoin launch to settle global transactions without Swift. When an institution that has existed that long starts seriously considering whether to route around Swift, that tells you something very specific about where Swift's competitive position actually stands right now. The public commentary is moving in the same direction. Eric Trump stated publicly that digital assets have already won. His framing was direct. He said, You think commodities are going to continue trading on a system where people's money gets frozen for 72 hours with no interest paid? He said everything is moving toward digitized rails as institutional adoption accelerates. He said the banks fought hard to prevent this from happening, but the banks have been broken. And he made a specific claim: SWIFT will not exist in 7 years. That stablecoins plus Bitcoin will replace slow banking rails with 24/7 settlement from a smartphone. No banking hours, no frozen transfers. Now, not every public statement from Eric Trump carries the same weight as a policy document. But the structural direction he is describing, 24/7 digital settlement, the erosion of correspondent banking's grip on the timing and control of money movement, is confirmed by SWIFT's own architecture announcement in Barcelona, by the BIS working group documentation, and by Western Union's stablecoin evaluation. This is not a fringe position anymore. The reaction from the American banking establishment confirms the same picture from the opposite side. The American Bankers Association is actively working to stop the crypto market structure bill from moving forward. Bank CEOs are reportedly being lobbied directly to contact senators and kill stablecoin legislation. That is not confidence. That is an industry watching its foundational structural advantage start to disappear. The control over settlement timing, over the float during multi-day transfers, over the 72-hour window where money sits idle. Stablecoins and blockchain settlement close that window. The institutions built around that window are in full panic mode. SWIFT ran the same defense for years. Their position was essentially that their scale and trust made blockchain disruption irrelevant. Then the language shifted. Then the announcements changed. And then SWIFT's chief product officer stood in Barcelona and said digital currency networks are part of the architecture going forward. The defense collapsed. And it is not just institutional announcements that confirm this. Gartner, the technology assessment framework that enterprise decision-makers use when evaluating infrastructure at the board level, specifically notes that regional real-time payment systems still lack the global reach of blockchain-based systems. And Ripple payments, powered by the XRP Ledger, is listed in that Gartner assessment as an alternative payment system to SWIFT Global. Enterprises use Gartner assessments to justify infrastructure decisions at the highest levels. That placement matters enormously. And the scale number that puts everything in context: 13,000 banks connected through G-Treasury, Ripple's network. SWIFT's documented membership is more than 11,500. Ripple's network is larger, and it is built on technology that SWIFT's own chief product officer just described as part of the future. Every single piece of evidence is pointing toward the same moment. Step back from the individual pieces for a second. Look at the full shape of this story from a distance. SWIFT announced a multi-rail payment strategy explicitly incorporating blockchain and digital currency networks, stated by its chief product officer at a major international banking conference in a recorded and distributed statement. More than 50 banks signed on to SWIFT's new framework immediately. The BIS PMI group confirmed both Ripple and SWIFT as active members working on cross-border payment standards from 2025 forward. Iran, Russia, and China are building blockchain-based payment infrastructure to operate outside SWIFT. Western Union is evaluating stablecoin-based settlement. The American Bankers Association is lobbying senators against crypto legislation. Gartner names Ripple payments as the blockchain-based global alternative to SWIFT Global, and Ripple's network spans 13,000 banks, larger than SWIFT's documented 11,500 members. These are not separate stories. They are the same story, told from multiple directions. And the direction is not ambiguous. Every major institution that tried to hold this technology back followed the same sequence: dismissal first, then skepticism, then cautious acknowledgement, then forced adaptation. SWIFT is at the adaptation stage right now. The banks currently lobbying against stablecoin legislation are still at the dismissal stage. The pattern is established. Institutions that resist longest do not stop the technology from arriving. They simply lose their ability to shape it. The institutions that engage early, that build the standards, get into the working groups, establish the infrastructure, those are the institutions that determine what the new system looks like. Ripple earned that position through years of work. The BIS seat is the documentation. The Gartner listing is the independent analysis. The 50-plus bank sign-ons are the institutional adoption. If you have been researching this space for 2 years or 5 years, if you held through every period when price action tested your conviction and the people around you questioned the thesis, you were not holding a speculative bet. You were holding a structural position. The thesis was that this technology would eventually be recognized and embedded at the highest institutional levels. That thesis is being documented right now in BIS working group papers, in Swift product strategy presentations, in Gartner technology assessments, and in the legislative panic running through the banking lobby. The resistance crumbled. What has not happened yet is the live deployment, but the infrastructure is built, the frameworks are being written with Ripple in the room, and the closer we get to that deployment moment, the more visible this transition becomes to the entire mainstream financial world. In the videos ahead, we will follow every development that moves this story from confirmed at the institutional level to live and fully operational. After everything we covered today, which part of this story do you think is the most underreported right now? Drop it in the comments below. If this video gave you a clearer picture of what is actually happening, go ahead and like it. It helps this channel reach more people who need to see this. And subscribe so you do not miss what comes next. Share this with someone in your circle who is only following domestic crypto news and has no idea what is unfolding globally. Stay informed, stay positioned, and we will see you in the next one.